Well, we're all on the hook for silver, just like the silver girls suspended by hooks. No silver girls have been harmed in the production of this video. But I know we're all suspense as far as what's it going to do? What's it going to do? It's going up a little bit. You know, in reality, the actual technical, I'm not going to get too deep into that, but it really has to get above 30 or pretty close to 30 before it actually breaks some resistance levels and it's going to move up higher. I suspect it's probably going to go a little bit below 26, even though it had a good day. You know, the classic thing is that, you know, it tested 26 4 times already. It's got to test it one more time and break through it. I don't think it's going to go to 21, but right around that time they're going to act. Let me just put things in plain common sense, very simplistically, and common sense goes a long way. You know, when you start getting, I look at the numbers, I look at a lot of different things, but then I just like to boil it down to simplistic things. It's like they only have a couple options left what to do. They can't cut interest rates anymore, and the economy is folding up. It's not looking too good in the United States because last Friday showed a lot of statistics that came out, you know, job creation and a lot of other things as far as going on, and a bigger slowdown in China. And of course, there's a slowdown in Europe. It's a global slowdown. Now, the interest rates across the board everywhere in the world are very, very low. You really can't cut them anymore. So, really, the only thing you can do is QE. There's just going to be more money printing. Now, the dollar itself is not going to go into oblivion, I don't think, because relatively speaking, you know, our dollar index might look pretty good. You know, today, right now, I don't know, it went down a little bit, but it's still sitting at 83. It could even go up. I mean, the euro could be the one that gets hammered even more. But I suspect that just like what happened last time, right before QE2, the euro got down to about 119 to the dollar, $1.19 to 1 euro. And that's when QE2 started to get hinted upon, and then everything started taking off. It might have to get a little worse. You know, unfortunately, I'm going to say this, but I'm just saying, you know, I agree with Ron Paul in principle and everything, but you know, it's like the people that hold gold and silver, if you want to win, actually the way you're playing here is a card game. You're playing a card game against everybody else who is into metal right now. And actually, by Ron Paul criticizing the hell out of Ben Bernanke, that's really kind of shot ourselves in the foot with gold and silver. Because all this criticism and all this heat he's been getting from all these different angles, I'm not saying he's got the right policy, but if you're in a small niche who's invested in gold and silver, Ben Bernanke's QE is what's going to make your metals move up. You want the rest of the population to panic into those metals, get into a real high bubble, cost, you know, $800 an ounce for an ounce of silver, and then sell it to them. And then you go buy something cheap that's a hard asset. That's really what you want to do. So, I got the right, well, that's a game that actually doesn't benefit everybody. And you know, the reality behind it is gold and silver is not going to benefit everybody. Well, I think you just, you know, getting into hard assets is going to help a lot too. But just this game that's going on with what hard assets to get into, what asset class to get into, that's strictly a card game. I think the people in the U.S. bonds right now, if they went and took all their U.S. bonds and they bought silver right now at the current prices, even if it goes down a little bit, and they just dumped all their money into silver, you know, certain people did. I mean, all of it. At the current levels it is right now, it's going up. It's going up. I know it is. That's something you can't tell them right now, but I don't care. I'm already heavily invested in silver. I'm not going to go even more unless I see it drop down below 26. Then I might go some more. There's some other things coming out on the horizon, and this is about oil. And there's been a price increase in oil lately, and there's a couple reasons why. Offshore oil workers have been on strike since June 24th, 2012, which caused a shutdown in a lot of the Norwegian oil fields. So the Norwegian offshore oil produces about 2 million barrels a day of oil, or about 2% of the world's supply. That's about what Libya produced, right? So that's a pretty good amount. So actually every 1% reduction in supply can raise the price of oil like, a few dollars or more easily. On July 1st, we know this just happened a little while ago, the European Union sanctions on purchases of Iranian oil also took effect. So that should be drying up the supply in the market too. I don't know. I just want to get a little bit, I was going to read a little bit about Dr. Doom over here. This guy, I really don't put too much faith in what he says. I actually listen to more Mark Farber. Nouriel Roubini is more like a playboy guy, I don't know what the hell this guy's like. He's definitely not going to be doom and gloom in his own money. I know that. He's going to be raking in more and more money. I'm very careful of what he says, but he says regarding Iran, negotiations have failed. He says the sanctions will fail. I think they will. And ultimately it's going to be an attack on Iran, and then double the global oil prices overnight. Now this is the thing I can't really figure out, and I don't think anybody can, because an attack on Iran can happen at any time. Somebody could screw up someplace, and it could just happen. It could, a lot of people think Israel could do it or whatever, but this is very important because, usually, oil prices going up by natural demand will actually cause a slowdown in the economy after a while, and then everything crashes, right? But in this case, it's going to be due to a constriction of supply and uncertainties of what's going to happen in the Middle East with Iran. That's going to actually drive up the oil prices. So it's going to be a very different scenario. So what is going to be the central bank policy when you have this causing a much more severe turn down economically? It's a simple stated fact. If oil prices go up this high, go up that high due to war with Iran, and the economy's already looking like crap, and interest rates can't be cut anymore like they were in 2008, like they cut interest rates, they're already at interest zero. What are they going to do? QE, right? That's all they can do. That's all they can do. So we're probably going to have a situation where the dollar index probably ain't going to fall like really, really super bad. But I think the metals are going up a lot. I think they are. It's just a matter of something's going to have to give. And, if you're going to have to print more money, they're going to actually have to print more money to actually try to stimulate the economy as much as possible, because the oil prices are going to kill everything. It's already looking like crap across the whole globe. And if it goes down even further, that's going to be a reaction of all central banks. And we know when they do QE, that's what raises the metals. So, this is also from Nouriel Roubini. Talking about in 2013, he says central bank policymakers are running out of options. That's quite obvious. I mean, they can only do so much. Already interest rates look like shit. We noticed for a million years. The metals don't look like a safe haven, but I swear I think that's a very temporary thing that's going to happen. If I don't really care what people do, but say somebody threw a couple $100,000 more at me or something like that I didn't know, they just had cash, I would just dump it all into gold and silver. The hell with it. That's what I would do right now. I think it's cheap enough to buy. And it would probably be less than a year. Damn thing will be up so high, it would be different. So I would just dump it. People are missing a boat right now, and I don't really care. But the game is, do you want to sell it to the people that panic and they want to get in there because everything's falling apart? You want to sell it to them at whatever it goes up to. That's be anybody's guess. But at one point in time, silver is going to really, really take off, and I think it's going to take off this year quite a bit. There's going to be some more bounces, though. That's the game. So, Eurozone train wreck, says Nouriel Roubini says the Euro train wreck will speed up, and it's going to crash a little faster. But I think, in my opinion, I think you're just going to keep printing money. They're going to have to start doing this. That's why, the metals are actually probably going to explode in value pretty soon. It's not going to be like a straight shot up to 150 or something like that, but you know, we can even have a record high silver prices this year. It's not without any merit to say that, because we saw what happened. It only took a couple months from to go from 26 up to 37. And if they did, you know, if that was solidly QE in place, it would have been up to 45 in less than 3 months. So, and then from there, I mean, they could raise all the margin requirements they got, but you know, there's a lot of different things going on because people are running out of options. They got nowhere to turn. You know, even if, and another thing is the latest data, which you knew from Friday, the U.S. looks very bleak. So the economy in the United States sucks. It's bad. It's bad news. There's no doubt about it. I mean, I looked at that stuff on Friday. That's why all the markets went down. And he says China will have a hard landing. That's what it looks like right now. But you know, common sense tells me that China's going to have a hard landing, because who are they going to sell their products to? I mean, really, the big market customer is Europe, right? Europe looks like garbage. They're in contraction. They got austerity. So who are they going to sell their products to? So they're going to have a hard landing. And what I look at it is like this: if they're not making a lot of money, they don't have anything to invest in, and they're not going to be buying U.S. treasuries. So what's going to happen then? Lots and lots of QE. That's why you're going to see the metals explode like crazy. I know it is. I don't need to look at, I mean, I look at the graphs and I look at that, but I got to look at something else. What are their options? They can't cut interest rates anymore. Nobody can. They're already down to like practically nothing, right? The economy looks like garbage globally. Every sector. The only bright spot was even the United States, and that is not, I think those numbers are rigged. And there's a lot of things indicating that they are. And just like even with China, they had the official numbers of the PMI at 50. It's really below. It's like 48, and they're having more contraction. And you know, even the numbers that, you know, HSB put out, 48, is probably too high. I mean, you're not going to go against the Chinese government too much. You know what I mean? They're not going to make their numbers look too different from the official Chinese government. Like I said, there's a lot of things out there where, like the steel and coal industries, they turned to farming and pig farming and stuff like that, and got out of that, because the same thing happened in China as what happened in the United States in 2007. The construction and real estate industry crashed, and that's about 50% of the economy. Now they don't have an export market anymore. So figure it all out. Figure it all out. What's going to happen? It's impossible that they're going to be buying lots of treasuries. We can't raise interest rates because that'll game over right there. That would destroy the United States overnight. So the only option they got is to print money. Now I guess if Ron Paul wasn't around and Ben Bernanke wasn't getting heat from like this big conglomerate of people out there saying gold is money and Ben, you're evil. Well, that evil guy is actually going to make you the money. He's going to make you the money. Let him do all the QE in the world. What's going to happen is you're going to trade your silver to somebody else in the middle class. This is the reality of what I'm saying. It really is. It's not going to actually make the net sum of people wealthy. Silver is not going to do that. It's going to actually be the right asset class to be in, and people jump in late are going to get held in the bag, and they're going to get screwed left and right. But actually, if you bought silver right now and you didn't buy any silver, and actually, if you even dumped 80% of your money into silver and 20% of your money into gold, you're going to be so far ahead a couple of years from now, it's going to make your head spin. That's where it's going. And I could say this with a lot more confidence because the mood is so dismal, but everything is pointing to there's only one option left. Print money. Print money. Lots of QE. Globally. All across the board. Everywhere. They're all going to do it. Real assets are going to go up. And that's why silver and gold is going to go up. It's a guarantee. I mean, you can analyze anything you want. Just keep it simple. But I already know what's going to happen. And this stuff is not that far off. There might be a little bit more of a turn down yet. But at one point in time, he's getting close to acting. Ben Bernanke is getting close to acting. Now, I just hope Ron Paul doesn't come out and yell at him and tell him, don't do that, Ben. And all these, because basically we're shooting ourselves in the foot if he doesn't act on QE. That's what's going to make silver and gold climb.